Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about the fourth quarter and the full year 2022 earnings results for Albertsons. And this company is actually doing pretty bad over the last year. They're down 34%, while the rest of the market is only down around 1%. And a lot of that came during this steep drop in October of 2022 when they fell from $27 per share to $20 per share, and they've sort of just been lingering around that share price ever since then. And so in this video, I'm going to talk about some of the recent news that came out surrounding Albertsons, specifically the Kroger and Albertsons merger that was announced in October. And then I'm also going to look into their financial statements and figure out the intrinsic value per share for this company so we can know if this is a good price to buy into the company from a value investing perspective. And so right here in this article, they talk about the Kroger and Albertsons merger and how the proposed merger might it's obviously attracting a lot of attention from antitrust regulators, and so they might have to divest even more stores in order to make it happen. In particular, we can see antitrust regulators are, it's attracting the attention of a lot of them. And right here, they point out that combined Albertsons and Kroger have about 5,000 stores in 48 states, which makes them rivals to the two bigger retail entities, Walmart and Amazon. And in order to make the merger happen, some antitrust regulators want to see Kroger divest about 100 to 375 stores, or they narrowed that range down to around 250 to 300 stores. But as it turns out, they might actually have to divest even more stores than that in order to get regulatory approval. So there have been a lot of hurdles coming up surrounding this merger, particularly from regulators who don't want to see a monopoly get created. But we're going to see how all of this ends up playing out in the future. And so right here, we can see their financial statements. This is their balance sheet, and they're comparing the results from February 2022 to February 2023. During that time period, the main thing that changed was their cash balance as a result of the special dividend that they paid out in January. They actually paid it out on January 20th, 2023. So congrats to anyone who was holding on to Albertsons stock during that time period. I was one of those people, so I did get the special cash dividend of $6.85 per share. But we can see right here, cash and cash equivalents decreased from around $3 billion to $450 billion, and retained earnings decreased from $2.5 billion to a $185 million accumulated deficit. Right here on page 61, we can see their income statement. Revenue year over year increased from $71.8 billion to $77.6 billion, and net income decreased from $1.6 billion to $1.5 billion year over year. Then right here, we can see their cash flow statement comparing the 52 weeks ended February 2022 to February 2023. During that time period, operating cash flow declined from $3.5 billion to $2.8 billion. And we can also see in their financing activities, the special dividend they paid out amounted to about $3.9 billion of cash in the last 52 weeks. They also paid out regular dividends on their common stock, coming out to around $255 million. So they definitely returned a ton of value back to shareholders in the last year or so. And this is really all a part of the build-up to the merger between Kroger and Albertsons. And so now I want to look at this discounted cash flow model to figure out the intrinsic value per share for Albertsons. Yahoo Finance estimated that they're going to grow at around 8% compounded annually for the next 5 years. So I cut that in half to 4% to be more conservative. They had around $1.34 billion of free cash flow in their most recent full year. And as a result of them paying out that special dividend, their net cash to net debt position on their balance sheet decreased to a net debt position of $14.5 billion, and their shares outstanding come out to be around 500 million shares right now. And this decrease in their net cash, net debt position had a massive impact on their estimated intrinsic value per share. If you recall from the last video we did about Albertsons maybe a month or 2 months ago, they actually were trading well below intrinsic value per share because their cash balance was positive. But now they aren't. Their estimated intrinsic value per share is $8. And we can see, that based on this right here, that their current share price is around $20. And so they are not trading below intrinsic value per share at the moment based on their current cash balance and their estimated future cash flows. Then right here we can see comparing them to Kroger and Walmart, two of the other big retailers here. Albertsons has the highest gross profit margin. They have around a middling of the pack, or actually the highest net profit margin, but it doesn't really matter. It's pretty much all around the same 1 to 2%. They have the highest return on assets, around 5%, compared to Kroger and Walmart's 4%. They have the lowest PE ratio, trading at 9 times earnings compared to Kroger's 15 times earnings and Walmart's 35 times earnings. And they also have the lowest dividend per share, but this is their estimated regular dividend per share. This isn't including the special dividend that Albertsons recently paid out to shareholders. So all in all, in terms of a competitor analysis, it looks like Albertsons is doing a lot better than Kroger and Walmart from a financial ratio perspective in this retail industry. And so lastly, I wanted to compare them to some of the other companies we've looked at in past videos. If you recall from the last few videos I've made that you've seen, Albertsons was actually one of the companies that was trading below intrinsic value up here. And that was mainly because of the fact that their cash balance was initially so high. But after paying out that special cash dividend, they've been knocked down to the 10th place spot here, trading at 2.5 times their intrinsic value per share, because they have a share price of $20 per share, but their intrinsic value per share is currently around $8. So they have been knocked down on that chart. Growth rate, they had a growth rate of 8%, so they don't make it onto the growth rate table here. In terms of gross profitability ratio was 25%, so they aren't good enough to make it onto the gross profitability table. Net profitability was only 1%, and then stock performance over the last 5 years came out to be around 34%, so they weren't doing good enough to make it onto the chart on that table either. Right now, first place is held by Tesla for stock performance at 700% over the last 5 years. Microsoft for net profitability at 36%, Adobe for gross profitability at 89%, and GE at estimated growth rate for the next 5 years at 44%. So in terms of comparing them to the companies we've looked at in the past, they're not doing that good, but compared to the other companies in their industry, they are doing pretty good. And we'll see how this merger between Kroger and Albertsons ends up playing a part in the future growth of this company. But at the moment, they are currently not trading below intrinsic value per share. So let me know in the comment section down below what you guys think of Albertsons. Is it currently a buy or a sell, or are you just waiting on the merger to see what happens? Let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.